A credit score is important in determining whether or not a lender will grant credit. Many financial institutions employ the FICO, Fair Isaac Corporation rating system. In today's video, we will be looking at what you need to know about your credit score. Number 8. What is a credit score? A credit score is a number that ranges from 300 to 850 and represents a person's credit worthiness. A borrower's credit score is based on how trustworthy you appear to potential lenders. More specifically, a credit score is calculated using information from your credit history, such as the number of accounts you have open, the total amount of debt you owe, and your repayment history, among other things. Credit scores are used by lenders to assess the likelihood of a borrower repaying a loan on time. The Fair Isaac Corporation, often known as FICO, developed the credit score model, which is utilized by financial institutions. Although there are several credit scoring systems, the FICO score is by far the most popular. If your lender uses Experian to obtain your credit score, they will see your FICO credit score. To have a decent credit score, you'll need to score between 670 and 739. If the lender uses TransUnion to examine your Vantage score, you should score between 661 and 780. However, there is no way to know which credit scoring model will be used by your lender. Lenders ask one of the 3 credit bureaus for your information, and they don't always use the same one. A person's credit score can be improved in a number of ways, including timely loan repayment and keeping debt low. Make sure you watch until the end to find out how you can improve your score. Number 7. How do credit scores work? Your credit score has a huge impact on your financial situation. It has a big impact on whether or not a lender would provide you credit. People with credit ratings of less than 640, for example, are classified as subprime borrowers. In order to compensate themselves for taking on additional risk, lending institutions frequently charge higher interest rates on subprime mortgages than on standard mortgages. For borrowers with a low credit score, they may also request a shorter payback term or a cosigner. A credit of 700 or above, on the other hand, is generally regarded as good and may qualify a borrower for a lower interest rate, resulting in them paying less money in interest over the life of the loan. Scores of 800 or higher are considered outstanding. While each creditor sets his own credit score ranges, the average FICO score range is frequently used. The size of an initial deposit required to receive a smartphone, cable service, or utilities, or to rent an apartment may be determined by a person's credit score, and lenders look at customers' credit scores all the time, especially when choosing whether to adjust a credit card's interest rate or credit limit. Number 6. You can check your own credit score. While it's true that too many difficult inquiries can lower your score, the effect is minor and only lasts a few days. There is also an exemption if you're applying for the same type of loan multiple times in a short period of time, so you may shop around for the best vehicle loan without worrying about damaging your credit. However, there is no penalty for checking your own score, and it does not appear on your credit record as an inquiry. Number 5. Credit reports and credit scores are not the same thing. While your credit score is intimately connected to your credit record, it is a distinct entity. Your credit report is a detailed record of your credit history, including your credit accounts, the frequency with which you seek credit, debt collection accounts, and public records such as judgments, liens, and bankruptcies. Consider your credit score to be a numerical representation of all these criteria. Your credit score may suffer if you have late accounts on your record. Your credit score will rise if you have a long history of making on-time payments. Most lenders just look at your credit score, which is why it's critical to review your credit report on a regular basis to ensure everything is correct. The 3 credit bureaus keep track of your credit score and report. Number 4. Your credit score and report. Your credit score is determined by 5 different factors: payment history, credit use, average age of credit accounts, account categories, and inquiries. Depending on the credit scoring model employed, credit scores are calculated differently. Lenders can use any scoring model they like, although the FICO score and the Vantage score are the most popular. Payment history is the most essential factor in credit rating, and even a single missed payment can lower your score. Payment history accounts for 35% of your FICO score, which is used by the majority of lenders. The next most important component in your credit score is your credit consumption, as measured by your credit utilization ratio. This ratio looks at how much of your available credit you're using and might show you how reliant you are on non-cash funds. Using more than 30% of your available credit is seen as a red flag by creditors. Your FICO score is determined in part by how much credit you use. The length of time you've had credit accounts for 15% of your FICO score. This covers the average age of all your accounts, the age of your oldest credit account, and the age of your newest credit account. The longer your credit history, the higher your credit score will be. Credit scoring models look at the different sorts of accounts you have and how many of each you have to determine how well you handle a variety of credit products. Your FICO score is based on your credit mix, which accounts for 10% of your total score. Lenders perform a hard draw on your credit when you apply for credit, which results in an inquiry to your credit report. However, this is the least essential factor, accounting for only 10% of your total score. Number 3, you can get free access to your credit scores. Each of the 3 main credit agencies, Equifax, Experian, and TransUnion, is required by law to provide you with a free copy of your annual credit report. If you cycle through the credit bureaus every 4 months, you can check your credit report. This can help you detect any inaccuracies early so you can dispute them, as well as guarantee you have a complete view of your financial situation. Your credit score is also available for free from a variety of sources. FICO scores are available from a number of major credit card issuers as part of their client benefits, and you can also get one through credit.com. Number 2, if you don't have a credit score, what should you do? If you don't have a credit score and wish to establish and build it, these choices will help you get started. Get a credit card that is secured. A secured credit card functions similarly to a regular credit card. To assist, establish, and build your credit, use the secured card to make small essential purchases and be sure to pay your payment in full and on time each month. Become a registered user. If you know someone who has a credit card, you might ask them to enroll you as an authorized user to help you get your credit started. Authorized users are frequently reported to credit bureaus by credit card providers, which adds to your credit history. You would benefit as long as the primary cardholder makes all of their payments on time. Number 1, how can you enhance your credit score? When you understand why your credit score is low, it can be simple to improve it. It will take time and effort, but starting good behaviors now will help you improve your score over time. Obtaining a free copy of your credit report and score is an excellent first step in understanding what is contained in your credit file. Then concentrate on the factors that are lowering your score and attempt to improve them. Make sure you pay your payments on schedule. Paying all of your bills on time every month is vital to boosting your credit because payment history is the most important component in determining your credit score. The next step would be to pay off your debts. Reduce your credit card balances to lower your credit usage ratio. This is one of the fastest ways to improve your credit score. Then make any payments that are outstanding. In credit files, late payment information includes how late the payment was, 30, 60, or 90 days past due, and the longer the time has elapsed, the greater the impact on your scores. Dispute any inaccuracies in your report. Mistakes happen, and erroneous information in your credit file could hurt your scores, so make sure to upload the correct information. And lastly, limit the number of fresh credit requests you make. The amount of hard inquiries in your credit file will be reduced if you limit the number of times you apply for new credit. Hard inquiries are recorded in your credit report for 2 years, although their impact on your credit scores diminishes over time. We have to end the video right here. Make sure to share this video with your friends and family if you found it helpful, and don't forget to like and subscribe to our channel. Stay tuned and we will be back with more videos. Bye!